All right, this is it, guys. The 2021 FHA loan requirements and absolutely everything you need to get qualified for your FHA loan. All right, so we're going to go over helpful tips and the biggest mistake you should avoid as an FHA loan applicant. And we're also going to talk about 5 additional loans that you might not have actually considered that you can get qualified to advance your real estate portfolio. So definitely stick around in this video. We're going to go over the lowdown in today's video. Lowdown. I just said lowdown. The breakdown in this video. What's up to all my returning subscribers? This is Pierre Meji, and in this channel I give out free value that has to do with the real estate industry, whether it's scaling your business as a real estate agent, as a realtor, or as an apartment locator, and other cool real estate tips and tricks if you're interested in purchasing property. So that's what this channel is all about, but what I'm most known for is teaching real estate agents how to leverage a really small micro niche that I bet you've never heard about called apartment locating. And apartment locating is a super cool, relatively new and trending real estate niche that you can take advantage of if you have a real estate license to make a 6-figure full-time income by working from home, which is really crazy because for the longest time, realtors couldn't even work from home because there's freaking lockboxes and super keys at physical properties, right? That's why apartment locating is super exciting. But anyways, though, let's go ahead and get right into this video. So if you're dreaming of owning a home while all the while carrying some debt, having less than perfect credit, or maybe you're going through some financial bumps along your journey of purchasing property, the good news is you're definitely not alone. According to CNBC, the overall home ownership rate has actually dropped to the lowest level since 1965. And I think this has to do with the skyrocketing housing prices that are going on in the market right now and an increase in personal debt. So if that sounds like you, then the FHA or the Federal Housing Administration loan might just be the answer you've been looking for. FHA loans are guaranteed by the Federal Housing Administration, and since the FHA insures these loans, that means the government will actually pay the lender from any default from the borrowers. But hey, the FHA doesn't actually lend the money itself, right? It's a government organization. It merely guarantees that the lender will not face any losses in case the applicant doesn't pay their mortgage and defaults, right? And this allows lenders to give more generous rates and requirements and terms because they know that they're backed by the government in case we don't pay the mortgage, right? So this lets lenders work with applicants even with a lower than normal credit score while still offering low down payments of the sales price as low as 3.5%. So that's a lot less money out of pocket if you're interested in going through the FHA route to get a mortgage to purchase a home. Oh, and contrary to popular belief, FHA loans are not just made out to first-time home buyers. Anyone, even a repeat buyer or a homeowner looking to refinance their mortgage, can use an FHA loan as long as they meet all of the minimum requirements. So as long as you're eligible, you can still take advantage. You don't just have to be a first-time home purchaser. So here are the updated 2021 FHA loan requirements if you're interested in getting an FHA loan. All right, so the first thing is you have to have a minimum down payment of 3.5% of the sales price of whatever home you select to purchase. Your credit score has to be over a 580 score. Then you can take advantage of that 3.5% down payment. But if your credit score is between 500 and 579, you might still be eligible, but then the down payment turns into 10% down instead of the 3.5 lower rate. But hey, if you're in the 500 or 579 credit score and a 10% down payment sounds like it's still a lot of money, don't be afraid though, because right now going on in the market, there are actually a lot of down payment assistance program that you can look into and actually take advantage of even at that credit score. And I just made a couple videos of the Chase program and the Bank of America program where they're going to come in and actually pay a lot of the down payment for you, like $5,000 to $17,000. So you might want to check out those videos after you check out this video right over there, because those videos are super relevant to what we're talking about. So don't miss those videos as well. There's a lot of grant programs going around or low interest rate programs to help you meet that down payment requirement. So what does that really mean, right? That means the real minimum credit score could be as low as $500, which is a lot different than the standard over 620 credit score that you're probably used to hearing over and over again, like that of conventional loans, right, where your credit score has to be over the 620 mark. But if you're really low on your credit score, then I would probably recommend building your credit score up higher, just because even though you still might be eligible, the higher the credit score you have, then the better mortgage interest rate you will be offered, which is a really big deal because over 15 years or 30 years of a mortgage term, that can mean thousands of dollars saved. So it's still a good idea either way to get the highest credit score possible in your financial situation. And if you're having a hard time finding a lender that is willing to work with you with a low credit score, right, you might want to look into a lender that really specializes in FHA loan applications, because they're going to probably be more willing to work with you at a lower credit score to get you approved properly. I feel like a lot of banks and lenders really would like their applicants to be over that 600 mark, but there are some lenders there that will help you take advantage of an FHA loan even at a lower credit score. So when you reach out to financial institutions or lenders or banks, make sure that they know exactly what an FHA loan is, and make sure that they have a lot of experience helping their clients apply for FHA loans, because then you'll be good and taken care of by a professional. And working with a lender that really understands the FHA loan process is really beneficial, because a lot of the times they're very familiar with the manual underwriting that takes place whenever they're trying to connect you with a good mortgage, right? So that could be really helpful to work with a company that knows all about the FHA loan applications and the manual underwriting involved. And you'll be surprised, some lenders know more about manual underwriting and have better relationships compared to other lenders. So it's important to go with a good lender. And this makes a lot of sense if you don't have a lot of credit history in general. Then it really makes sense to go with a lender that understands the manual underwriting process for sure. All right, so the next thing is that you should also take into consideration the debt to income ratio. That's what DTI stands for. I know you've heard that term before. And all that means is that your total monthly debt payments can't be more than a certain percentage of your pre-tax income. And there's really two numbers to remember here, okay? 31% for the front end DTI, meaning for just your mortgage payments. And then 43% DTI for all the back end debt to income. So the back end stuff means that's all your debt payments, including credit cards and even other loans, just everything in total. All right, so the next thing is, as far as what to actually show when you're applying, you need to show documentation like a social security number, pretty standard, your driver's license, your proof of employment, which is like original pay stubs, and then 2 years of your last W-2 or tax returns as well. You also have to have a permanent address and proof of residency, hence the driver's license. And they might ask you for your bank statement, so it's good to have all that in order as well. And if you're refinancing a current mortgage, then you'll need to show notes and deeds from other mortgages, property tax bills, homeowners insurance, and rental agreements, right? They might ask for that stuff as well if you're refinancing. And hey, if you're wondering about the loan limits, here are some numbers to get you started. So a lot of the loan limits has to do with like the zoned area where you're going to actually apply for the mortgage and purchase the property, right? So for the low income areas, the limit for like a single family home is $356,362. And if you're applying for a duplex, it actually goes up. $456,275 would be the limit for a duplex. A triplex would be $551,500. That would be the limit. And the fourplex limit would be $685,400, and that's in low income zoned areas. Now for a high cost area, things are a little different. For a single family home, the limit is $822,375 for a single family home. Big difference compared to the $350,000, right? And for a duplex in a high income zoned area would be $1,053,000. A triplex limit would put you at $1,272,750. And for a fourplex, it would be $1,581,750. But remember, right, loan limits vary by state and then the county that the property is located in. And if you want to check your area to see what your limit is, just go to the FHA.com website. It's also important to note that not every property will be eligible for an FHA-backed mortgage loan. All right, so the requirements for this FHA-backed mortgage is that the property actually has to be a principal residence. It can't really be like an investment property. It might be a drawback. So how do you actually prove that it's a principal residence? Well, at least one borrower must live in the home within 60 days of closing, and the property can't be purchased within 90 days of a prior sale. So that means no house flippings involved. And then the title of the property must actually be in your name or a living trust right at settlement. Oh, and all properties must actually go through and undergo the FHA appraisal process as well. And that just consists of like a HUD, or the Housing and Urban Development approved inspection. And this just makes sure, and it just vets the house that it's safe and sound and actually secure. I know it's kind of a lot of rules, right? But if you really want to buy your first home with reasonable terms and take advantage of the FHA, then you got to get through that stuff. And even if you don't quite get through every single one of those requirements, they can still do a manual underwriting, which just means if your situation just nearly doesn't actually meet all the requirements, a lender may still consider your loan application, but they're going to have to review it more closely before approving it or denying it. So there's still a shot anyways if the lender feels comfortable after the manual underwriting and really scrutinizing and taking a look at your information on the application. So what can you actually use this FHA loan for, right? And like I said before, the FHA loans aren't just for first-time home buyers. There's actually 5 different kinds of FHA loans that you can take advantage of. All right, so number 1 is a basic home mortgage loan 203B. And that could be a fixed or adjustable rate that are for several different types of homes, like when we talked about the duplex, single family, triplex, right? So fixed or adjustable rates. I like fixed rates. I feel like everyone would agree by now. So the second loan is a 203K rehab mortgage. And that finances purchases and renovations with one loan. There's a lot of finance and refinance options with that one, right? The 203K. And the third loan we're going to talk about is a construction to permanent loan. This finances the construction of a home, as well as the land on which it will be built. So maybe you want to build a new home, right? That's where that would make sense. And the fourth loan is a Title I property improvement loan. And this is used to purchase a manufactured home or to improve one in case it needs repairs, right? You can actually get a loan for that. Isn't that interesting? And the fifth and last one is the energy efficient mortgage. That will actually finance energy efficient upgrades while you're purchasing the home or refinancing it. And you can do this for both new homes and resale, like pre-existing homes as well. You can take advantage of that energy efficient upgrade loan. All right, so those are the 5 loans, but don't forget about the biggest mistake you should actually avoid as an FHA loan applicant.